Well, hello once again, Mavericks. Let's continue our Japanese candlestick patterns. Joe with you here. Today we're going to flip to the bear side and talk about the bearish engulfing candle. As always, guys, this is just a class. These are statistics. Take responsibility for whatever you decide to follow along with all of these courses. The first thing we need to do is jump into our statistics. As always, we're using the Thomas Bulkowski method, his website. He broke down about 103 different types of patterns and ranked them all. So I'd like to share that again with you on the bearish engulfing candle. Frequency rank is 11 out of 103, so this is a very common candle. And what's the catch with common candles, folks? Well, if you see a candlestick pattern very often, it probably gives a lot of false signals. So the overall performance on this is a little to the low side, 91 out of the 103 that are gathered together. Now, the best percentage meeting price target is 76%, so that's pretty high in a bear market down breakout. So where this happens, just like all patterns, is going to be meaningful when it comes to a success rate. We'll talk about that in a little bit here. So the best average move in 10 days is about 6% to the downside, so these can be powerful. As you guys have probably already followed along with, the majority of bearish signals or bearish patterns do have a high percentage because it falls quickly. It doesn't mean that they sustain, and that's one of the biggest hiccups with the bearish engulfing. Now, the best 10-day performance is 21 out of 103, which is still a little higher than I would expect, but this is on a bear market with a down breakout. And what is meant by that, folks? Plain and simple. We need to see a move upward. This is referred to as a bear rally. So the overall trend we want to see down, but we'd like to see a bounce or some sort of short relief rally up until we see the bearish engulfing. Here's a great picture of a bear candle. Now, this doesn't necessarily need to be a Marubozu for you guys paying attention. There's no shadows on this candle, so it'd be a Marubozu. This can have shadows, but the most important thing to take away from this example is the body of the reversal signal. This red candle, it could be black depending on the type of chart you're looking at, needs to engulf the previous body, in this case, this green one here, in its total range. Now, it doesn't have to take into consideration the highs and the lows. One body has to envelop, or I should say overshadow, the other body. Now, once you have that, we have what is referred to as our bearish engulfing candlestick. Now, the pattern isn't complete until we get our confirmation candle. Now, this needs to trade below the body of the engulfing candle. This can happen 2, 3, 4, 5 days later. So what's really cool about this, you could get a bear rally and you could get a consolidation period with this engulfing candle. It could jump around, it could go a little higher, a little lower, stay within the range, but until it breaks the level or the low point of that reversal candle, it hasn't confirmed. So what's the best conditions and setups for the bearish engulfing candle? Plain and simple, a downtrending chart. Now, specifically in a downtrending chart, because this is a bearish pattern, I've got an example coming up that shows a engulfing candle as it's moving lower versus the bearish engulfing candle as it confirms a bear rally. So after a bear rally has occurred, this is where you're going to get that Bulkowski's 76% success rate. It's usually after that exhaustion rally or oversold bounce. There's all sorts of things you could call it, but it is a move upwards in an overall downtrend. Confirming below the engulfing candle is going to be your trigger. Be patient with this. A lot of traders will see the engulfing candle and immediately jump into it. Now, a couple things with that. It hasn't quite confirmed. Sure, it's enveloped the majority of the move to the upside, or it's showing that it's at least going to pivot or slow down or even stop. But until that momentum continues lower, we don't know if we're going to have traders jump onto this, moving it further down. So wait for the confirmation below the engulfing candle low. Once again, folks, this doesn't have to be the next day. This can take a couple of days to have happen. So let's jump out, take a look at our example. Well, I've got a chart here, and what I want you guys to see is this has come from a pretty decent downtrend, and it's actually having a pretty good bounce. It's almost retraced the majority, I should say, of the overall move from once it started to go down. So this is a pretty big bear rally at this point. So all I want to do here is I'm just going to kind of click forward. You guys know the deal on this. This is a previous chart. Obviously, this is real life. This did happen in the past. But I want to walk you through a couple things that I noticed. The first one I want to do is show you a bearish engulfing pattern on the way down. And then I want to show you another one after a brief bear rally. Now both of these will work out. Let me get to that point here. So you can see we just set a new low, right? A lower high, I should say. And it looks like we're moving down. So as I get down here a little bit more, I know that we run into a little bit of a doji, and there it is. We've got a bearish engulfing candle that actually engulfs 2 days, but once again, we want to see the bear candle, today's red candle, or this red candle here, enveloping a green candle. In this one, it is a doji, but it is a green candle. Now notice that this has happened after a pretty good move to the downside. So it is a bearish engulfing candle, and let's take a look at the next day here, folks, because I do believe it confirms. There's your confirmation. It slipped a little bit, but there's your confirmation. Now it's feeling a little bit extended, but let's see what happens over the next couple of days. Well, it turned right around on us. Now, if we would have got into the confirmation day and hit our target down there, let's say about 140, we might have been able to get out of it in the morning, but it looks like it turned around and it's come back up. So let's continue on here. Oh, there's another candle up. So this one did confirm, and it actually did go down through our confirmation, but it didn't really sustain any sort of move to the downside. Now moving along here, folks, I've already pre-planned this as always. We are going to find another one, and this one is going to be at the peak of that last move to the upside that we just saw. A couple of more trades here and a couple more days. Now this is starting to look like it wants to slip lower, but it doesn't. And boom, there we go. We now have our bearish engulfing candlestick. It's engulfing actually 2 previous days. Now what makes this a little bit better than the previous is notice that we've had a pretty good bounce off of that previous bottom, and it's more to the upside. Now this is kind of a consolidation, not so much a pivot point, but it is indeed a bearish engulfing candlestick. The next day, it looks like, I think, yep, so we confirm the next day, and watch what happens with this one a little bit. So it continues lower. With most bear moves, once again, they're very quick and they're very aggressive, so you want to make sure that you target it. Here we are already back down to that 140 target that we saw in the first example, and this one actually spills a little bit lower, a little bit more extended. So in this situation, having it confirm after a bear rally or a move higher, we got a substantial move to the downside versus the one that was already at the lower end where it was almost a head fake. Remember, this ranks pretty low, 91 out of 103 when it comes to consistency, right? Because there's so many of them. So make sure that you focus on exactly where this happens. And in this case, much better after a bear rally. All right. So to review, pattern happens frequently, right? It's 11th. It's the 11th most common pattern out of the Bukowski's 103 that he takes a look at. Pattern ranks high in return. We know that the 10-day target is going to be at least 5%, or almost 6%, I should say. Always got to wait for our confirmation candle. That is key. With all of these trades, you guys have probably heard me say this enough by now. Best after a bear rally, but short-lived on-trend continuation. That's the biggest hiccup. So I saw this. I showed you guys the example of this thing starting to fall down, and it had a nice bearish engulfing candle with confirmation, but it only lasted a day and it turned right around. Best to wait for these after the bear rally. All right, guys. That's our pattern for today, the bearish engulfing candle. I hope you enjoyed it, and we'll talk to you next time. See you guys.